Welcome back to Looneymoose. In today's video, we will delve into the fascinating world of investment products. Whether you're a seasoned investor or just starting out, understanding the different types of investment products is crucial for making informed financial decisions. So let's dive right in. Before we jump into the specifics, let's begin with a brief introduction to investment products. Essentially, investment products are financial instruments that allow individuals to put their money to work in order to generate returns over time. These products can range from traditional stocks and bonds to alternative investments like real estate and commodities. But of course, the most well-known investment products are stocks and bonds. Stocks represent ownership in a company, while bonds are a form of debt where you lend money to a government or corporation. Stocks provide the potential for capital appreciation and dividends, while bonds offer fixed interest payments over a specified period. For instance, imagine you invest in shares of a pharmacy company. If the company performs well and its stock price increases, you could sell your shares at a profit. On the other hand, bonds can be a stable source of income for investors seeking more predictable returns, as this instrument will pay interest called coupon. The next one is mutual funds. This tool will pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers who make investment decisions on behalf of the investors. In other words, they will pick which stocks and the bonds for us according to what they think the best. Let's say you invest in a mutual fund that focuses on consumer stocks. Instead of buying individual stocks yourself, you can buy hundreds of consumer companies in one go through the mutual fund. This way, you benefit from professional management and also risk diversification. And now, the next tool is called ETF. Exchange-traded funds, or ETFs, are similar to mutual funds but trade on stock exchanges like individual stocks. They offer diversification and can track specific indexes, sectors, or theme. For instance, if you believe that the technology sector will perform well, you can invest in a technology ETF. This investment would provide you with exposure to a broad range of companies, similar to a mutual fund, but with the added advantage of being easily tradable on the stock exchange. Although this will become the downside too, meaning we have to have a brokerage account to invest in ETFs instead of just buying it from the bank. Now we will talk about real estate investment trusts, or REITs, which allow investors to invest in real estate properties without directly owning them. REITs own and manage income-generating properties, such as office buildings, shopping malls, and apartments. Let's say you want to invest in real estate, but don't have the means to buy a property. By investing in a REIT, you can gain exposure to the real estate market and earn dividends from the rental income generated by the properties owned by the REIT. Apart from traditional investment products, there are alternative investments that offer unique opportunities. These include commodities, hedge funds, private equity, and venture capital, and don't forget, cryptocurrency. For example, if you believe that gold prices will rise in the future, you can invest in a gold commodity fund or buy gold futures. Alternatively, investing in a venture capital fund allows us to support early-stage startups and potentially earn substantial returns if they succeed. Or buying in the crypto fever, well, with decent research and risk management, that probably might work well too. Now, sadly, we typically have to deal with much higher risk and uncertainty when we dive into this non-traditional path of investing. So just to make sure we use our idle money and a small part of our savings to learn how to venture into this thrilling territory of investing. Now for a bonus fact, the stock market goes up more than 70% in any given year for the last 100 years. That's pretty A. And there you have it, a brief overview of the various types of investment products available to investors. Remember, it's important to carefully assess your investment goals. Thanks again for joining today, and we will delve deeper into each instrument in the next videos. Like, subscribe, share these videos with people you care about, and see you soon.